Gold futures closed lower on Friday, but posted their biggest weekly gain in 9 months. Gold futures ended lower on Friday, easing back a day after the crisis in Ukraine helped lift the commodity to its highest finish in 8 months. But prices still marked the sharpest weekly gain in 9 months. The precious metal overall had a stellar week, with its role as a haven for capital and a store of value coming to the forefront as political tensions in Eastern Europe between Russia and Ukraine have increased. Colin Siezinski, chief market strategist at SIA Wealth Management, told MarketWatch early Friday. The most active contract touched the highest intraday level so far this year at around $1,905 an ounce. Before retreating, gold for April delivery GCJ22, minus 0.24% GC00, minus 0.24% lost $2.20, or 0.1%, to settle at $1,899.80 an ounce. After surging 1.6% on Thursday, carving out the highest settlement for the most active contract since June 2, 2021, FactSet data show. For the week, the precious metal rose 3.1%, steepest weekly rise since May of 2021. Conflict between Russia and Ukraine intensified on Friday, with reports of shelling along the front line in eastern Ukraine's Donetsk and Luhansk regions, with Kyiv saying its troops have been issued orders to exercise restraint in responding to artillery fire. The Wall Street Journal reported panic headlines spur speculative betting in COMEX options, but underlying investment flips negative as physical traders take profit, said Adrian Ash, director of research at Bullion Vault. Gold prices may be likely to retreat if NATO-Russia tensions ease, but the underlying drivers look set to remain. He told MarketWatch. Asian consumer demand continues to rebound from the COVID shutdown, and central banks also continue to accumulate gold as a group. Investors in precious metals also have been closely monitoring monetary policy developments, with the Federal Reserve expected to raise interest rates to combat high inflation. While war fears dominate the headlines, I believe the main driving force behind this rally remains rising inflation, said Peter Spina, president and chief executive officer at goldseek.com. The trend is up, and the gold price can quickly continue climbing here to its next technical price target of $1,920. The minutes released on Wednesday from the Fed's late January policy meeting didn't imply that the central bank was adopting a more hawkish stance than investors have already anticipated, which had helped support further buying in non-yielding gold. In the coming weeks, it's likely that gold will continue to enjoy upward pressure from high inflationary pressures, but any geopolitical premium will be harder to predict. Jason Teed, co-portfolio manager of the Gold Bullion Strategy Fund QGLDX, told MarketWatch. A price in excess of $2,000 would not be an unreasonable expectation in the coming months. In other COMEX dealings, March silver SAH22, plus 0.29% rose 0.5% to $23.992 an ounce, ending about 2.7% higher for the week. March copper finished at $4.52 a pound, down less than 0.1%. For a weekly rise of 0.3%. Read, undefined April platinum PLJ22, minus 2.21% lost 1.5% to $1,076.80 an ounce, but ended 5.7% higher for the week, while March palladium PAH22, minus 1.02% fell 0.9% to $2,337.90 an ounce, 6.6% higher for the week.